just the last 15 to 18 months have probably been the worst real estate market we've had in Houston probably since 2012 or 13. You know, when it comes to real estate development, you also have to fall in love with business too. It's not just falling in love with the end result of what a community could look like, but nobody sees business acumen that it takes of how to structure the deal.
What was working for y'all in terms of how y'all were getting through it, how y'all were selling homes?
Creativity. In tough times, the only people that last is creativity.
Okay.
The motto for Wynwood is transforming communities and lives through real estate. We're transforming lives by, if you're purchasing at 350 or below and you're going to some of these communities early on, but as the community continues being built out, they can potentially gain that equity. One of the things you have to take into consideration when you're going into new areas where there's no new construction happening and you are going to be the pioneer, you don't want to go purchase a property to build 3 or 4 homes. You want to go buy 7, 8, 9, 10 acres. But when you're going to buy in areas like that, you got to be able to buy something that's going to be a sizable project to impact the neighborhood.
Yeah. Y'all, welcome to another episode of the Blueprint Podcast. Our goal is to help you grow your faith, build wealth, and make smart real estate decisions. And today we have a Houston new construction GOAT, Mr. Demetrice Ballenger with Wynwood Group is in the house. But also a quick shout out to our sponsor, Josh David with CTC Mortgage. Josh, for the builders watching this, Josh will help cover your title policies or your 2-1 buy downs, help you save money on your closings. If you are a buyer and looking to buy a house, he also has a grant where he can give you up to $7,000 to help you purchase your new home on a down payment, closing costs. So appreciate Josh for helping sponsor this episode. But man, Demetrice, thanks for coming in today, man. This is exciting.
Thank you, man. Thank you for inviting me.
Yeah. Bro, it's so funny. I keep wanting to call you Demetrice Wynwood for some reason. So I got like, it's Demetrice Ballenger. Okay, don't say Wynwood. But yeah, tell me what's the reason behind the name of Wynwood? Like what is that?
Man, actually, Wynwood came to mind when I was thinking of a company name. I wanted to kind of be unilateral from a marketing standpoint. So 2 things, one of the previous companies I worked at, like where I really made a name for myself in the market, the name of that street was Wynwood. And then when I looked the name up, like what it actually means or where it came from, there's a community right outside of Miami called Wynwood, and it's kind of an upscale, high-end luxury community. That's kind of like a graffiti style community, but it's very high-end and luxurious. And so that's why I chose to go with that name.
Gotcha. Yeah, I love it. Yeah, it sticks in my brain. I always remember that. It's a really good one. So for those who don't know, I call you the GOAT because in terms of like development, you're one of the few people, minority developers that's really doing that at a really high level, right? So I really look up to you in that regard. So for people who don't know why I call you the GOAT, tell them, who are you? What do you do? Flex on us really quick.
So I'm one of the partners in Wynwood Group, and we focus a lot on the inner city developments, like high, townhome communities. I think we have over 19 active projects right now, totaling about 380 plus homes. We have 2 divisions within the company, a development arm as well as the brokerage arm. My business partner, she runs more so the sales division and the brokerage arm, and I more so focus on putting the projects together, bringing in the projects, land acquisition to site planning to architectural planning to, either raising the capital or partnering with the builders, or it's a combination of a lot.
Or one-stop shop, basically.
Securing the construction financing with different banks that I have relationships with, and bringing the projects in and making sure all sales and marketing go through our company as well. So we're kind of like a one-stop shop, a true real estate firm, just in a boutique style.
I love that. So I know a little bit about kind of your your background. So talk a little bit about your family legacy. I think that's something I don't know if a lot of folks know. I mean, you're kind of, we talk about generational wealth and passing it down. I mean, you are the embodiment of that. So kind of talk about kind of your family legacy and kind of what brought you to the place where you have the knowledge, the expertise to kind of execute at this level.
I always people always ask me that question, like, man, what's your background? How did you get into it? I kind of have somewhat of a little bit competitive advantage against a lot of my competitors or just peers in general. I grew up in a construction family, so my dad's been in land development and land construction all of his life. And I'm from a small rural town back in Georgia, so I grew up around the industry. Didn't know real estate was going to be the actual I always wanted to be a businessman, but didn't know real estate was actually going to be the business I chose until my senior year of high school. So I grew up around a lot of subdivision developments, apartment developments, retail center developments, shopping plaza developments, just by my dad being in the industry.
Yeah.
And then I started my college career of studying architectural at Tuskegee.
Okay.
But I quickly noticed then I'm a numbers guy and kind of a straight to the punch guy.
Yeah.
So I pivoted and switched over to engineering,
Okay.
and I chose civil as my discipline. So I transferred out from Tuskegee to Prairie View.
Okay.
Studied civil engineering, worked in the field a couple of years, then got my real estate license. I slowly dibbled and dabbled in the real estate in like 2014, and then 2015 I walked away and jumped into real estate full time.
Gotcha.
So when it comes to like land acquisition, land development, it's kind of like a second language to me. It's just like if you speak Spanish, it's a second language to me. So it's some things that when you ask me, how do you know these things, that come from years and years and years of exposure and experience.
Yeah, I love that. And I think that's part of the disparity in terms of when it comes to, I think the Black community is really, as a whole, collectively, really trying to grow in that space, in the development, building. And I think everyone's trying to learn so they can pass it on, right? Because, our other groups of people have maybe had a step on us because of that, right? They've had the exposure, they've had generational information passed down, and so you're like one of the first waves of like, you're the second generation, right? And so I think that's really powerful, and I think that's what I think a lot of people are envisioning when they talk about generational wealth.
Right.
It's you, right? It's like it's not just having the developments to pass along or the properties. It's just like that
actually
knowledge.
The knowledge and the information. And then also another thing that when it comes to real estate development, especially on the scale that we've been doing it on, you also have to fall in love with business too, because it's not just falling in love with the end result of what a community could look like and what the houses can look like. That's majority of what everybody see, but nobody sees the business acumen that it takes of how to structure the deal, how to raise the capital, and the partnership agreements, who's going to be responsible for bringing the financing to the table. On small projects, yes, you can partner up with some high net worth individuals or some people that just, have money that they want to invest. On your bigger projects, you got to kind of push it up a needle, partner with institutional investors that's not only bringing capital to the table to take down the land so you can have the land as collateral, but also being able to get them to also bring financing to the table. Because on bigger projects, you're not necessarily going to your small banks asking for the money to finance those projects, because a lot of things comes into play. You have to more so partner with companies that can also raise institutional funds to be able to provide the financing for the project. So they're also bringing the equity for the project as well as the debt for the project as well. So,
gotcha. Yeah. Okay. I want to come back to that, but something you mentioned about you switched from architecture to engineering is interesting to me. We just went viral on TikTok and Instagram from a clip that we posted from one of our previous episodes. We were talking about how like Black architects are really rare, right? And I was in the comments, and there's just people just like, it was hundreds of comments, but I kept seeing these common themes. One, people are asking, how do we teach the next generation? So back to what we just said earlier, they're thinking about how do we keep this going, right? The second one was, I think a lot of institutions are pushing people toward engineering. And it's so funny here in Houston, engineering is that's a big employment center for that. And engineering has made more entrepreneurs than any other profession I know. Travel nurses and engineers, man, I didn't see those people. They make their money on their W-2s and switch over to entrepreneurship, right? So, it's built for that. You can make a six figures. You can really get your career going and make some money. So talk about that. Do you think that why do you think that is? Why do you think that engineering
is one of the most rigorous programs you can study? When I'm talking about stretching your brain, it's one of the most rigorous programs you can actually study. The unique thing about what you just talked about, if I had to do it again, it probably wouldn't be engineering. It'll probably either be finance or economics. Because when you're getting into real estate, especially to the vision of some of the projects and deals I want to be a part of and get into, it all boils down to finance and how to structure the deals and put the money together. But as far as engineering in general, it's so many career paths you can take. Just under the civil discipline, you got you can get into surveying. Your surveyor is a civil engineer. Your transportation engineer is a civil engineer. And transportation is multiple different disciplines. You can get into traffic controls. Those are your engineers that design the traffic lights and manage those traffic lights. There's a big engineering firm out of Houston that manages a lot of the traffic lights in Houston. You can also get into aviation. At the airports, that's a traffic engineer, or transportation engineer. Then you have environmental engineering, that's civil. Then you have hydraulics engineer that's dealing with like erosion, and so
Dang.
it's
so
it's a lot of opportunities just under civil.
Okay.
And I always had a thing against mechanical and electrical engineers.
Okay.
And we always, this is just an engineering thing.
Yeah.
And for the people that listen, they'll understand. I always feel like your civil engineers are the most important engineer in the world because they design the infrastructure of the world. But coming out of college, you're the least paid engineer, as opposed to like mechanical or electrical or chemical. They go work in, they can go get in oil and gas industry. Where starting out, they're making six figures.
Yeah, absolutely. Yeah, that's a good. I'm glad you. I just learned something just now too. So that's interesting. Okay, so let's talk about the challenges builders are facing right now, right? So we're coming out of what is a tough real estate market. You know what I mean? And so the cool thing about Houston is that Houston is still leading the country in terms of like just production and volume we're getting out there, right? So, and you kind of mentioned like, hey, this, it has been tougher year than previous years. So kind of what are some of those challenges that y'all are facing and kind of overcoming right now?
So just from my experience, I would say this past summer or just the last 15 to 18 months have probably been the worst real estate market we've had in Houston probably since 2012 or 13. It's been very challenging, and the challenges have been, number one, interest rates. I feel that, let me answer it quick. So number one, interest rates. Number two, uncertainty in the market. And number three, we was in an election year that created some uncertainty. Not necessarily who's going to become the president, who they wanted to be the president, but it's about who's becoming the president and which direction the country's going in. Right. But just to go back to point number one, with interest rates, I think the Feds did everybody a disservice in the fourth quarter of December 2023. It was like December 2023 when the Feds came out and announced that you can expect interest rate cut, because that's when interest rates was at 8%, like 7.75 to 8% during that time. You remember that? So where the Feds came out and said, hey, in the first quarter of 2024, we're going to do, you're going to see some rate cuts. And then they, confirmed that in January when they spoke again. Interest rates didn't go down. Then they came back and said, hey, we're going to drop rates. You can see rate cuts in the springtime going into the summer. Rates never dropped. They actually went up. So then during the summertime, they came out and said, hey, you can see rate cuts, et cetera, et cetera, et cetera. Rates went down just to go back up, a quarter of a point. And so what that did, what made it challenging is if buyers are hearing the Feds come out and say they're going to do rate cuts, why buy now? I'll just wait. They keep saying they're going to do rate cuts. Then when rates don't get cut, they come out and reaffirm us again that, hey, we're going to eventually drop rates. Only thing is done is buyers just going to keep waiting. Right. And so then that leads into going into the third quarter of the year where everything is about the election now. Then we had a president drop out of the race, and he selected a candidate to be the running mate of the current president now. And so that created an uncertainty. Okay, we got a president drop out of the race. Then they just threw someone in there. Then who's going to win, and, whoever wins, which direction we're going in. Then you have the war in Israel taking place. So it's a lot of things. It was a lot of moving parts going on. And then at the same time, you got big companies laying off people. So some people are scared to buy because they don't know if they're going to they're going to have a job. So it was just a tough year that we had to grind it out. And it was harder to raise capital, harder to get construction financing. And even on the construction financing, the criteria to get construction financing, not with your hard money lenders, but going to your traditional community banks, that became even harder. Their rates went up. So then you was put in a situation, do I go through not the redlining, but do I go through all the red tape that it takes to go to a brick and mortar bank to get construction finance for my project?
It's cheaper.
And they're at 9% interest rate or 9.5%. Or do I just go to a hard money lender that's giving out money for 10.5% or 11% with less red tape? I'm going to pay a little bit more in interest rate, and I may pay a little bit more in points. But if I don't have to go through the red flag of it, I'd rather go that route. Okay. So it was just a lot of moving parts that was going on.
Okay, that makes sense. So and I've seen a lot of builders that kind of became distressed builders at that point, right? Because if you do go the hard money route, those interest payments are hitting you, right? So your product's not selling. Right. That's like another risk, right? So I think it's kind of balancing those things.
Right.
What did you guys, what worked, right? So obviously there's still challenges, but like what was working for y'all in terms of how y'all were getting through it, how y'all were selling homes?
Creativity. In tough times, the only people that last is creativity.
Okay,
you
so
have
give
to
me
get creative.
specifics on what that means.
So what I mean is you may have to go get multiple lenders involved. What lenders are offering the best product, not for you as a builder or a developer, but for the consumer? Are there any lender incentives that the lender is giving? Because now buyers are asking for everything. You know, you have agents that are kind of buyers agents that are kind of dictating it, saying, "Hey, let's ask the builder for X, Y, and Z." Okay, as the seller, builder, developer, whichever whatever you want to, the title you want to give us. You know, at one point we do have to give seller incentives, but hey, who else can help us out with this? So, you know, finding lenders that have maybe, programs like Maurice Tillman, he has a program now that's 100% financing option, no PMI. He's given $8,000 lender incentive in addition to what we're able to give. We have another lender, Paul Mitchell. He's able to, give like a 1.5% of the loan amount to the sellers. And so what that means in dollar value, let's say you got a $400,000 house, roughly he's giving $6,000 as a lender incentive. Okay. And now instead of us giving $10,000 or $10,000 plus the appliance package, and then we had to also get creative with, in certain price points and projects that we have, because you got two different buyers. You got buyers that are mortgage payment driven, meaning how much is my mortgage payment going to be? Yeah. So I don't know if I can afford it. Then you got buyers that are only driven by interest rates. And so for the buyers that are mortgage rate driven, or more, just the mortgage driven, those are kind of in your lower price point communities. And so for those projects, the best marketing tool that we could do was a rate buy down, because buying the rate down on a 2-1 buy down, it can bring their mortgage from like a $3,000 or $3,100 payment mortgage down to $2,500. Now that fits their budget or what they can afford to pay a month. Yeah. And then you have, your more sophisticated and educated buyers who kind of in that $400,000 and up price point. They're more so looking at it, hey, I want my interest rate to be this. And it's more so helping them be able to buy their rate now to get them the right interest rate they want to lower the APR. So it was being creative as possible. Okay, gotcha. In trying to survive.
So with that being said, are you now focusing on more of those like 350 below price homes because of that, or are you like, do you want to dabble into like the more luxury market?
No, so I always kind of focus on that sweet spot. Okay. And in the city, for the first time home buyers, is being able to have a product that you can sell below 350. Okay. That's your first time home buyer price point. And so when I look at the average price point of projects we have and that we're selling, it's kind of at an average price point of 350. Okay. And the motto for Wynwood is transforming communities and lives through real estate. We're already transforming communities by going in and redeveloping them, and changing the landscape of some of these communities. And then at the same time, we're transforming lives by if you're purchasing at a 350 or below, and you're going to some of these communities early on, because those are going to be your first projects that come. Yeah. And then as the community continues being built out, they can potentially gain that equity. The equity share, so it's kind of changing their lives. So not only are they becoming a first-time home buyer, but if they buy right and buy at the right time and in the right area, in certain scenarios, they could potentially see, anywhere from $80,000 to $100,000 equity gain. So that's changing their lives. So that's creating wealth for them.
Yeah, that's awesome. I love that. So, which kind of brings me to our next point in terms of, how you balance profit and quality when it comes to building, right? Because, there's not every builder is the same, right? There's some builders that are coming in, they're using, apartment grade, supplies and stuff, and they're just kind of throwing it up there, right? And throwing a price tag on it, and they're just selling them, right? And then that's where you get where people don't want to buy new construction now. There's kind of the TikToks out there, like, don't buy new construction, you're buying cardboard, you know what I mean? So there's that, and those are very profit driven, but then also you got to make money, right? And so obviously the cost of building has increased, some of the things you talked about already. So it's like, how do you really balance getting that really good product that actually is helping people, but then also at the same time protecting your profit margins and protecting? So have you guys been able to find a balance there, or is it kind of just like, hey, it's case by case? Like, what are your thoughts on that?
So, a few things. and you know, we can talk about this later, but a few things is there's a difference between a builder and a developer. A builder is the one that's actually building a project.
Right.
I don't operate in that role. I operate in the developer role.
Okay.
And so we hire builders to build for us, or we partner with builders that's going to bring the building component to the table. And so for one of my builder partners, we go buy a lot of the materials overseas.
Okay.
You know, we have X amount of homes planned over the next 3-4 years, so it may be more business savvy or cost efficient for us to just go overseas to like the builder show that they have in China, and we'll basically go select some of the finishes from there that's very similar to the finishes here, and it's really the same finishes.
Okay.
We're just getting it at a fourth of the cost.
Yeah.
You know, storing it in a warehouse.
Yeah.
And so we're able to bring balance to that to where we can offer a lower price home at a very from a very good quality standpoint. So that's been able to help out.
Yeah.
And then at the end of the day, when you get into some of these projects, price point, I mean, it's only so much meat on the table. You know, when you're operating in that 350 and below, your profit margin per house, you're probably looking at anywhere from, you know, 40,000 to maybe 45,000 at max.
Really? Okay, gotcha. Okay.
But you get into the volume business.
Yeah.
You know, if you're pushing out 50, 60 to 100 homes a year, you're getting into that business.
Gotcha.
You know, when you're in a higher price point product, yeah, you can make, you know, the $80,000-$90,000 profit margins on a higher price point product, but you're taking a bigger risk because there's more buyers operating in the affordable price point than there is in the luxury price point.
Right.
And for me, from my experience, the most difficult buyers have been the buyers that operate in that 500 to like 850 price point, because they're either a physician, a junior attorney, you know, engineer. They know more than you.
Yeah.
Everything you build is not up to their standards.
Yeah.
So it's operate. You know, I call that. Someone told me moving into the Joneses division, like trying to keep up with the Joneses.
Yeah.
But at the same time, they're kind of difficult because they come in already thinking they know more than you.
Yeah.
But they're still depending on you at the same time.
Yeah. Okay, that's interesting. You know, something that I've kind of noticed a lot that seems to be a trend is Houston Land Bank. And that seems to be kind of coming up in terms of Houston. I think that's the largest land bank in the U.S. Have y'all been able to kind of leverage that? Did you use that at some point in your career? Is that something y'all still use in terms of kind of getting more affordable land and all that kind of stuff?
I never, did a project with the Houston Land Bank.
Okay.
It's something that I did explore.
Okay.
I think the Houston Land Bank is a great opportunity and platform for a lot of your beginning builders and beginning developers,
Okay.
Because it's an affordable price to get in.
Yeah.
But the profit margins are on, at least from my perspective and just from my experience, the profit margins aren't necessarily there, but it's a great opportunity for some of your smaller builders to operate in that space, because they're still doing the community a service, bringing affordable housing. It accomplished the Houston Land Bank mission. Krista, she's I think is a phenomenal leader, and a great leader in what she does.
Yeah.
So it allows the city to keep expanding.
Yeah.
And even though we're in one of the most rapidly growing cities, I think last year we had 120 something thousand people move here.
Yeah.
So we're in a rapidly growing city, and it helps a company like the Houston Land Banks help balance affordability in a metro city like Houston.
Yeah, absolutely. Gotcha. And are y'all working with any other programs to kind of to like help, I guess more lower income, lower middle class buyers get into properties? Because I mean, even at 350, 340, you're still paying, depending on financing, you're still paying 25, 26, 27, $3,000 a month, right? So I mean, that's still, for some people, that's still kind of a stretch, right? When it comes to home ownership.
So I'll say this: we haven't partnered with any government entities. Now we did partner with Harris County last year in a way to where we worked directly with their purchasing division.
Okay.
And they had, a couple of $1 million that they needed to spend in a certain precinct, or they was going to basically lose the money. And one of my projects I think you're familiar with is Benbrook. Our highest price we got that's an 84 home community. We're 50% sold out. We had 9 different floor plans to choose from there. I think our biggest floor plan, the 1951 square foot or 52 square foot, that was on the market for $345, but then we had like a 1430 square foot floor plan that we were selling for like $289.
Okay.
So our average price for that community And our number one selling floor plan in that community is the Magnolia floor plan, which is like 1776.
Okay.
That's more than like 314.9, 319.9. So for that community, we was still able to bring like an affordable price. But that was land that we purchased back in 2020.
Yeah.
Yeah.
Dang. Okay. That's what I was telling somebody on the phone the other day. I was like, you got to be able to think 4 or 5 years ahead when it comes to buying land, because I know a lot of stuff y'all building, y'all bought 3-4 years ago and y'all sat on it, and then
and when we purchased that land, we went under contract on that land in 2019, and I think we was probably on the contract like 8-9 months, but that's feasibility, then et cetera. But our intentions when we put that property on the contract was to bring a product in like the 249, 259. But then COVID happened.
Yeah.
Price gouging came about, material costs went through the roof. Contractors' costs went through the roof, so we still ended up at like a 289, 294.9 average price point.
Okay, so what are some of the trends you're seeing for 2025 in terms of Houston new construction? That can be, and you can answer this multiple ways. You can talk about maybe even some of the building plans in terms of exterior look, maybe some interior, like some things that buyers are interested in, or even maybe just like areas people. So, I mean, what do you think are some of the trends that we're going to start to see?
I think you're going to start seeing a lot of the gold finishes come back. I'm starting to see that's a trend.
Okay.
But as far as like, you're still going to see like craftsman style homes. You're probably going to see some more brick elevations come. But as far as like, really no one has a crystal ball.
Yeah.
And we just came through, we're all hoping for the best.
Yeah.
But reality, man, I can say this, Wynwood and my partners and my builder partners and my investors, we're still full speed ahead with caution lights on, respectfully, but we're full speed ahead because of the demand that Houston has on it.
Yeah.
And the last thing you want to do is sit on the sideline and wait for the market to change and then get back in the game. But then you're like paying current market prices for land. Then you're paying current, construction. So it's like, so for us, we're still full speed ahead in acquiring property, planning those projects out. Like we have a property we bought in 2022 that's going to be 114 homes, anywhere from 109 to 114 homes. We just submitted the plat a couple of months back. We're now working on the engineering plans, but that's going to be a project that we're probably going to break ground in the summer of 2025, and we're trying to bring an average price. We're trying to bring, at least in the first couple of phases, a starting price point in the 279 to 289.
Okay.
Just because of the purchase price we bought the land for.
Gotcha. Okay, that makes sense. So in terms of like capital raising, what are some tips that you would recommend, or some things you've used? Because a lot of times we talk about investing and all these things. It's just look at the numbers, right? But the numbers, when you're in a tough market, is it still just the numbers? You know what I mean? Or is there more to the conversation?
This one so for me, let me give you a little bit, a piece of me. Whenever I'm looking at properties, and when I'm looking at properties in new areas where land is still fairly cheap, there's multiple hats that I'm wearing. Number one, I'm wearing a developer's hat. I'm wearing a realtor hat, like from a salesman. I'm wearing a banker hat. I'm wearing an investor hat. I got to be able to sell the American dream. Because at one point, when you do put a property on the contract and you're trying to pitch this to investors, your investors are going to want to go drive the site with you, see the site. So for me, I'm driving through seeing, okay, the prices are very affordable here from an acquisition standpoint. Now let's look at, how to develop it. And that's getting your engineer involved. Then also, okay, if everything checks off on my box from being able to develop the land, okay, how do I pitch this to an investor? How can I get them to buy into it? So you got to be able to sell them American dream. So you're also doing your market analysis from a marketing perspective of seeing what's in close proximity, what's the school zoning, how close are they from downtown, how close are they from the medical center, how close are they from the energy corridor for people that work in the oil and gas industry. Then you're also looking at it, is there any other projects that are under construction now? And so one of the things you have to take into consideration is when you're going into new areas where there's no new construction happening, and you are going to be the pioneer, you don't want to go purchase a property to build 3 or 4 homes. You want to go buy 7, 8, 9, 10 acres, because now you are the market. You're driving the market for that community,
Right.
and you're gonna have to set your own comps. So you want to be able to bring a project of 70 to 80 to 90 to 100 homes, because now you are impacting the area.
Okay.
And respectfully, you're gonna have your smaller guys that come in and say, hey, they're building a big community. Now I can go buy a lot to build 4 or 5 homes, and that's fine. But when you're gonna buy in areas like that, you got to be able to buy something that's going to be a sizable project to impact the neighborhood, where you are going to bring your comps. And then lastly, you need to put on a banker's hat. When you bring whichever bank that's going to provide the financing, or even if you're going to partner with a private equity or a hedge fund, you got to put a hat on and say, hey, this is what we're bringing. We're going to be in a lower price point, which the price point is somewhat going to sell itself. Here's the mortgage lender we're partnered up, because they're bringing this to the table, and here's the marketing division that we're partnering up. They specialize in selling, because the bank, they want to look at it from a totality standpoint. Who's the builder? Who's the sales? Who's the broker or the sales team or the marketing team that's responsible for selling it? And what lender are you partnering up with that's going to help you accomplish this? Because we need to know who are your buyers and what profile are the buyers. And if you're going to be below 300, great. Because that's a product. At the end of the day, if you can't sell, you can easily convert that to a rental.
Yeah. Okay, gotcha. That makes sense. Bro, how much faith goes into this, man? Because, like, I'll just say for myself, entrepreneurship has made me a stronger Christian. I'm like, Lord, I need you more than I ever did. I'm like, man. So I don't know how much your faith plays into this, if at all. But, like, talk about that. Because, I mean, obviously, you have the feasibility studies, you have the data, you have the marketing. But I'm sure at some point it's kind of also some luck, right? It's just like, hey, we need something to break through, right? I mean.
Oh, absolutely, absolutely. You know, if I'm not walking the floor, pacing the floor at 1 or 2 o'clock in the morning, or like my hair is standing up on my head, I'm not a part of it. Like for me, I need something that's always challenged me. I get bored easily, and so I need something that challenged me, that keeps me like, hey God, man, I know you're gonna come through on this. Like
you ever get tired of that though? Do you ever just want comfort? Like just be like, hey, let's
let me say this. Sometimes it is comfort, bro.
Yeah.
From a standpoint of like when you're used to a challenge. That maybe that do bring comfort. Like in real estate development, the reason why I say you need to also, you know, study business, because every project is a new business. Every project is a new LLC. You may have the same investor side to it, or a different investor side to it, but there's a partnership agreement to it. There's a different pro forma for it. You can buy 10 acres across the street. I can buy 10 acres across the street. We can have the same lot dimensions. We can purchase it for the same price, but our development costs may be completely different. My development cost may be $30,000 per lot. Your development cost may be $45,000 per lot. Because you may have to do loan taps for sewer lines. I may have submitted my project to the city right before you submitted it. I may have reserved the remaining water capacity or sewer capacity, and you may have to do an extension. So it's every project is a new business, literally a new business. Even though we may say, hey, we're going to use the same architectural plans on project A and project B, so you know that cost, and you know your vertical cost from a construction standpoint. But as far as like horizontal costs, you don't know until you get your engineer involved. So a lot of it is you have to fall in love with the business side of it. For me, at least that's what's going on.
I remember I asked Garland Harris when around the time I kind of really started getting my footing in this, kind of really understanding the game. And I would see him finish a project and then jump into the next one. And I was like, y'all don't want to just go relax, kick your feet up, go out to the beach, like enjoy the money you make. I'm like, man, it's just like rolling into the next project, right? And so,
and I'll tell you something, man. For me, what has worked for me, I always attach myself to something bigger than me. And so for me, what I attach myself to is being able to, like, when I go to these market studies like with Zonda that tells us, you know, what has happened over the last year. Here's the market share that's taking place in certain areas. We're still underbuilt. You know, we need to keep moving forward. When I look at numbers, you know, the HAR report that comes out that say, hey, we had 120,000 people, you know, move here. So there's still a demand for housing. We're underbuilt. And I look at companies like HP, Hewlett Packard, that relocated from California to Houston. Exxon, that relocated their headquarters from Washington to the Woodlands. Chevron, that's building their headquarters out. When I start looking at those numbers, I try, and then also, you know, I'm a member of the Greater Houston Partnership, and I go to a lot of their like not classes, but like their conferences. And when I see like the city has already committed $10+ billion in investing into the the Houston port, I think we have the third largest port in America, but we have the number one producing port in America by exports and imports. And so when I start looking at those numbers, I attach myself to something bigger than, Demetrice, I'm just doing this to make money. I actually look at it like, man, I'm being a service to my community. I'm actually help changing the landscape of my community. In Houston, I recently became a board of directors for the Acres Homes Chamber of Business and Economics in Acres Homes. So, and we have several projects over there. So I kind of attach myself to something bigger. And most of the time when you do that, more than often, you're going to find yourself where you're not doing this just for you. You're doing this for a cause.
That means a lot to hear, because I think that's also like every young entrepreneur, you try to find that what is that thing, like what is the thing that drives you. Something like to kind of bring it back to kind of spirituality is something that's really important to me, is kind of understanding why I'm motivated, like what's motivating me to do the thing. And really transparently, I've been money motivated for a while, man. Just like, I got to get it. You know what I mean? And that's the stage of entrepreneurship. I mean, I got to get out the mud, right? I got to really just hustle. But I think something the Lord has really brought to my attention. He's like, do it for your family, right? And I was like, oh yeah, I'm doing it for my family. Yeah, whatever. You know what I mean? I'm trying to take care of my family, generational wealth. I think a lot of people say that, but if you really start looking at your priorities, it'll tell you what's really important.
Correct.
And so that's something that I've just really been like, hey, I got to make sure in everything that I do that this, like, the first person to win is my family, my wife, my future kids, my parents, like everybody, you know what I mean? So talk about that from you, like what is like the personal thing, right? Because obviously the bigger vision of like helping the city is great, right? But like, is there something that's driving you from like a more internal or a family or spirituality, is something there that's happening to?
For me, I grew up in a construction family, and on my dad's side, everybody was in business for themselves. So for me, being a businessman or entrepreneurship is kind of normal to me. So like, it's just more so, and not saying that from a bragging standpoint, but that's just saying like that's a part of my DNA. And I think what's going on now in America, you're seeing new DNA, being established. From a generational wealth standpoint. But for me, no, family is first for me. I got a wife, a son, and 2 daughters. So family is, priority to me. And then partnerships, like, put yourself in circles and partners are like-minded, and like understand, number one, what it is you trying to accomplish. And once you understand what it is you trying to accomplish, then, you need to understand, okay, who are the people I need to be around every day that has not necessarily trying to accomplish what I have, but they have something they're trying to accomplish that shares similarity into what we're trying to do, and partner with that. And then, for me, I'm a forward thinker. I'm a very strategic. My mom had me in a chess club from like 4th and 5th grade. And then I played in the chess championship. So for me, I'm very methodical and strategic. That's a part of my DNA. So for me, whenever you see me doing something, know that probably this was planned 5-10 years back. So I'm always thinking like 20-30 years out. As far as like, okay, here's my end game. Here's what I'm looking to be doing, and working backwards, reverse engineering and saying, okay, for the next 2-3 years, what do I need to be focusing on?
So where are you at in that progression? Like, are you finishing out and about to start the new thing, or is this like, hey, I'm walking into the thing that I planned 5 years ago? Or
I'm walking into the thing that I planned years ago, and the business opportunities, that are outside of real estate, that are coherent to real estate, are starting to fall in my lap, and that was something that I planned. And so there's, opportunity for multiple things that I don't want to disclose right now.
Absolutely.
I want to kind of keep that in my back pocket, but those opportunities are now on the table. That's setting me up for bigger opportunities to kind of get more into like the commercial sector of the industry, to service the residential part that we're bringing. So yes, I'll say that. So I am walking into some of that.
I love that. So I'm gonna ask you a question I don't think anybody's ever asked you before, and I'm gonna preface this. So we recently were together at the I guess the Black Developer Summit meeting that Vanessa Cole and Greg put together, Greg Monette, and man, that was so cool for me just to be in that room, because it's so funny. Like I knew half the room individually, right? But it was cool to be like, oh, these are all the people, and we all in the same room together, right? And that was just really cool, and I love that they're putting that together, because I think it's just needed. And that's the thing I love about Houston, is the collaborative spirit. And I don't know if it's like that everywhere, but this is just what I've came up in entrepreneurship seeing. And I'm like, man, this is cool to see people who are competitors that are in the same room just sharing what's working for them and giving their resources. And I'm like, that's just so cool, right? The question that I have for you is that I think, especially in the Black community and when it comes to real estate, I think we are starting to collaborate and really help each other out and help us all get to the next level, right? What I'm curious to see is when you think, or if it already happened, I don't know, starting to work collaboratively with different groups. So, and I don't want to make it like a race thing, like black versus white, but like a lot of times I'll see rooms where it's like you got white developers and white builders in a room sharing, collaborating. You got black developers in a room collaborating. You know what I mean? And it seems like it's almost siloed, right? And it's not that I don't think it's even happening intentionally. I think that sometimes you just work with who you know, right? Who you're comfortable with, and that's just a natural human thing. But do you see opportunity, or you participate in opportunities where we're like working collectively with different groups, right?
So yes, definitely. And I'm glad you brought that up, because when I first like got going in real estate, like, you know, you always look for a mentor. And more than often, you're always going to look for a mentor that look like you, that got years of experience, and that are doing real estate to the vision that you saw. One of my challenges was, when I first got going in real estate, was I was seeking out mentorship, but I couldn't find nobody doing real estate on the vision that I saw myself doing it. Yes, you have people in real estate, but it was like, man, we're building 3 houses here, building, 4 houses there. And all I kept looking around was, number one, you got your public companies. They throwing up master plan communities. Number 2, you got your local guys. They're throwing up big communities. And when I looked at, or was seeking out mentorship from someone that looked like me, they wasn't doing it. And so it was very frustrating. And so I said, you know what? That's fine. Let me figure out a way to do it. And so then, that's when I started getting a part of different organizations, because before Zonda came about, and I literally just had this conversation in a lunch meeting. Before Zonda came about, there was a company called Metro Steady. And the gentleman that used to run it, he now started his own company, Lawrence Dean. He was like the market president or the division president. Lawrence used to invite us everywhere. So, and Metro Steady is the company that your national. They were Metro Steady.
Explain what that is for people who don't know who Zonda or Metro Steady. Explain
That's what I was about to say. Yeah, okay. So Metro Steady was a company that do all like the market analysis and market studies for your public companies, like your D.R. Horton, your Pulte Homes, your David Weekley. They'll go do these economic studies in an area where development isn't taking place, and do like a micro and a macro study of like, hey, this is what's going on in sales and as far as development. Now, like they keep up with how many lots are being developed on, how many permits have been pulled for housing, and they also do it for multifamily. Well, then Zonda merged with another company and bought Metro Steady out. And so now the company is called Zonda, and they do the same thing. And so, but when it was Metro Steady, Lawrence, he would invite us to meetings. Some of the banks that we was working with back then would have their private meetings. And I remember specifically going to a bank meeting. There was probably 15 of us in there. Through the invitation of Lawrence, I was the only black guy in the room. And when they was talking about business in general, and they was looking at like who are the investors, like, or shareholders of their bank, minority was like less than 1%. Black people was less than 1%. And so when the conversation came up, just talking about the different ethnicity groups that are shareholders in the bank and who are starting to pull their money out because of the uncertainty in the market at that time, the conversation did come up about black people. And when I looked, the president of the bank was looking down at me, and then the subject kind of changed a little bit. But I never took offense to it. I just said, because for me, I'll make you uncomfortable before you make me uncomfortable. Because in some of these rooms, I don't look at it like, oh, I don't supposed to be here. Some of these rooms, I'm supposed to be here making decisions. That's just who I am. And so for me, I looked at it like, man, it's 2 things that pop up in your head when you're in a situation like that. Like, man, we got to get better. Is it we got to get better, or do we just don't know? Like, do we don't know, from an educational standpoint, do we just not know that, hey, we can invest in the bank? and be a shareholder in the bank. Or, hey, this is where we need to be putting our money at. Or these are the rooms we need to be involved in. Or, hey, if you want to make educated decisions about development, hey, you need to start going to these, because it goes back to your question, is it hard to raise capital, or how do you raise capital? When you start presenting proposals to investors that you're working with, and you're saying, hey, here's the some reports that we got back from Zonda, and here's what the housing market currently is over a year-to-year basis, and here's where it's going. Here's how many lots have been developed. Here's our pocket neighborhoods that are undeveloped. Here's what's going on, and you start using things like we was talking about in that meeting, like the Houston Plat Tracker, and you may go through, Michael, and say, man, there's no development going here. I don't want to buy here. I may go through and say, we need to buy this, buy this, buy this. Yeah. And you may come back and say, hey, Demetrice, why are you buying in the community? I just walked away from 3 sites over there because there's no development. Yeah. I may be able to say, hey, this builder already purchased this builder already purchased that, this builder already purchased this. And so for me, it's more of an easy sell when I'm able to put a map together with a software I use called MapRight and highlight the properties that we have under contract, are the properties that we've already purchased, but then I highlight also the surrounding properties that have been purchased by different builders, put their logo on there. And when I put it in a bigger presentation, and then we bring investors in or fly investors in and drive them through the communities, and we got the map like, hey, this project is going to have 50 homes, this project is going to be 20 homes, this project is going to be X amount of homes. It's an easier sale, because then from an investor or from an investment fund or from a high net worth investors, for them, they're looking at it like, man, this guy or this person or this company, man, they're really putting in the work, and they understand the market they're operating in. Yeah. So it makes it a little easier raising capital. Okay. But that was one of the driving factors that drove me back then when I couldn't find mentor and really someone that looked like me. So the next step you do, you go outside of your circle. Yeah. And I started hanging around people that's doing real estate on a big level that didn't look like me, got in the rooms with them, went to meetings with them, went to investors meetings with them, and I kind of took that and applied it. Yeah, I love that. Yeah, it's about the relationship and being strategic about the rooms you be in. And there's this saying that's been driving me is it's become the person who has X, Y, and Z. It's like, don't, like, a lot of people, we go and like, I gotta do to get the thing. And it's like, no, become the person that can be in the room. Become the person that, like you said, like, your perspective is, I deserve to be here. Like, I'm thankful to be in the room. It's like, I deserve to be here. Like, you know what I mean? I put in the work, you know what I mean? So that's like a different perspective, a different confidence that you have to, ultimately, I think comes from God first, because like, we can manufacture it ourselves. Like, oh, I did this, my hard work. But I think to some degree, you really have to say, okay, like, I'm here because of, like, my faith and what God is doing in my life. And so I think that's number one. And then number two is, like, does the work that you do back up? And then three, like, do you believe in yourself? And have you made, I think for me, the confidence I have in myself is, I took the risk and the risk paid off, right? And so that's something like, oh, okay, cool, it worked. Like, you know what I mean? So now you get confidence. And sometimes it doesn't work, right? But the big wins help you know, like, hey, I won the big thing, you know what I mean? So I know I can get through the little ones to get to the next big win, right? And so that's just something that's really, I wanted to encourage people. And it's so funny, my sister just graduated from college. And my wife reminded me I needed to get her a gift, right? I didn't know what to get her. I was like, like, she's my little sister, you know what I mean? Like, whatever she, you know what I mean? We take care of her, right? But like, it's like, I'm something like, what do I get her that, like, that's gonna mean something? I get her a gift card, like, you know what I mean? Like good guy. So I was at Buc-ee's getting gas before I drove to Waco, and I was like, I love the Buc-ee's experience because you see the signs going to Buc-ee's, and like, all right, it's 100 miles or 50 miles, whatever, and you have to see the sign, right? So if you don't see the sign, you don't know when the big stop is, right? And so I got her like a little Buc-ee's kind of gift package, right? Got our gift card and some cups and like just Buc-ee stuff. And it was so profound to me that, like, we have to understand where our Buc-ee's moments are, right? And where the signs are on the side of the road that we have to pay attention to. And so many times people are driving and they're looking for the wrong sign, right? Or they're not paying attention to, like, oh, that sign is that's the next thing, you know what I mean? Or that's the thing that gives you hope to keep going, right? So that's the one thing I wanted to encourage people who are, young builders, developers, who are watching this, like, pay attention to the signs, right? Because you got to know when your next moment is. So that's kind of a piece of value that I wanted to add to the audience. As we kind of wrap up, last thing for you, I mean, like, for you, do you have your own kind of thought process on that in terms of, like, how to get to the next thing, right? Because you obviously have reached a level of success that I think a lot of people would strive to, right? And you've gotten through the lumps, right? So what would you say to someone who's like, they're trying to get to their next Buc-ee's, right? I would say, for, guys that are people in general that want to be in development, to get you a journal and write it down, and or get you a blank sheet of paper, draw a bubble circle, and say, hey, write your name and put future real estate developer, or just put real estate developer, or put real estate in general, real estate professional in general, and attach from that bubble, write down everything you think you need. And what I mean by that is I knew I wanted to be real estate. I knew I wanted to be a real estate professional. I didn't necessarily think I was going to end up with my real estate license, but that was a part of the journey, which actually played into my benefit. And the reason why I say that is draw a line and say, okay, who all does a developer work with? They work with a realtor. So draw a line and say, I need to have a relationship with a realtor. I need to have a relationship with a broker. Draw another line and say broker, real estate broker, a mortgage lender, commercial lender, investors, architect, engineer, surveyor, builders. And on the builder, you got multiple discipline of contractors. Okay. And when you write that down, you may look and say, man, I don't have a relationship with an engineer. I don't have a relationship with an architect. I don't have a relationship with an attorney. And that may be a daunting task. But start small. It's like, it's so many of us that have resources or references that we can point you to and say, hey, Demetrice, I don't have an engineer. And for me, I talk to my engineer often. I talk to my surveyor often. I talk to my attorney often. And I talk with my banker often. My lender that provides us a lot of construction. I talk often to them. And I strategically build those relationships to where they go from a client relationship to more of a friendship. So I became close friends with the owner of the engineering firm I work with. I became almost a son to the architectural firm I work with, Samantha. She calls me her son or baby. I became close friends with a couple of different surveyors. I became close friends with my banker. Me and him go golfing. We hang out together. I become close friends with my mortgage lender, Maurice. Our wives have became, close friends. And so I always kind of look at it like, we can't choose our family because of blood, but we can build our own family and not just through that. Like, so I look at it like, for me, when I did that example that I gave you, I said, hey, I don't want this to just be a client base. I want this to become a friendship because this is who I am. So I'm not like, I only need to work with this engineer one time because I'm only doing development to do one project to say, I did a development project. No, I'm a developer. I'm going to be doing this probably to the day I die. So I need to have longevity relationships. And I would say start from there and then just start, slowly building out those relationships because that's when you said earlier, how much is this look? You realize that, man, areas that we're buying land in, my engineer may call me and say, hey, Demetrice, let's go to lunch. Hey, the lot you got on the contract, this other builder or developer that I'm designing a project for, they got the 3 acres down the street, and this is what they're doing. Nice. Then suddenly, my architect may call me, hey, Demetrice, I got a client that came in that they don't have a real estate company they're working with, and they got they got an acre on the contract or 2 acres on the contract, and I because they're trying to figure out what kind of floor plans they should design, and I told them they really need to work with you, and so now that's another business, that's another client that we're working with, a future client that we're working with, or my lender may call me and say, hey, Demetrice, I'm financing a project for one of our clients, but I don't really trust the company they're working with, and I highly referenced you, and I'm gonna set us up a lunch meeting so I can make the introduction. That's another client I got introduced to. Or my surveyor may call me, hey, Demetrice, I'm surveying a property. Man, they ain't got no realtor or they ain't got no real estate company they working with. They don't know what to build, but they buying this lot I just surveyed, and I told them about you. And hey, Demetrice, I want you to work with them. The deal's already closed. We just need to make an introduction. That's another client I'm getting introduced to. And suddenly you find yourself slowly in a circle to where your marketing budget goes down because business is kind of falling in your lap. You just have to perform. And then number 2, you find yourself meeting people along the way that eventually you become friends. One of my investors, or one of my clients, was a part of an investment group, but we slowly built a close relationship over time to where he eventually branched out from that investment group. Then eventually we became friends, and he went from just, an investor client of mine to now we're actually partners on projects. So you'll see like, and this is a marathon. It's not a race. And what I'm telling you is not something that happened yesterday, or Man, I've been doing this since 2015.
Yeah.
So some of my relationship, I've been working with my engineer since 2017.
Yeah.
I've been working with my architect since 2018.
Okay.
My surveyor since 2018. My banker friend that I'm telling you about, I've been working with him since 2017. Right. So a lot of this is longevity relationships, and that has something to do with where I grew up from, which is one of the things I loved about Houston. My hometown is roughly about 2,500 people. Wow. Like, everybody knows everybody.
Yeah.
Like, when we got in trouble as kids, it made it home before we got home.
Yeah.
And so saying that Houston is a big city, but it has small town vibes.
Yeah, it does.
And so for me, I kind of applied the same thing of how I grew up here in Houston.
Yeah.
So a lot of my relationships are long-term relationships.
Man, that's so good. And the thing that I heard you say when I kind of filtered it, when you were talking about writing it down, for me, I heard like, write out your blueprint, right? Which is a shameless plug, right? The Blueprint Podcast is like, plan it out, right? Write it down what you need, talk to the Lord about what you need, get out there and build relationships. And so, if you're watching this, first of all, hit the subscribe button and hit the like button. If you're watching at this point, you're getting a lot of value out of this. But I want you guys to use the Blueprint Podcast as the blueprint for your life and where you want to go, because we bring on really high quality guests. There's great people on here that you can start to learn about and build a relationship with, and get exposed to new information. And so follow, I got Demetrice's information will be in the show notes. You see a lot of different style of guests on our show, so check those people out, right? And as you're making your list, writing it down who you need, come to the Blueprint Podcast and see if the person you need might have been a guest on our show. So man, thank you for coming on, bro. This has been a great episode.
Appreciate it, bro.
You, man. You're one of those people that I look up to. I've been watching your journey, and so I was taking some of the things you were saying that last section for myself. I'm like, yeah, he's talking to me right now, right? So I appreciate that I have guests now that are really adding value to me. So, man, keep doing what you're doing, man. You're paving the way for the next generation. We appreciate you, and giving your flowers now. I'm sure a lot of people tell you that, but I just want to give you that from myself. So, yeah. Man, thanks for coming on.
Thank you, man. Thanks for having me.
That's no problem. All right. See y'all guys in the next episode of the Blueprint Podcast. Peace.
Peace.